Hello folks, this is Howard Reitzel from Invest Financial with our January 2015 financial update. In this month's video, we will talk about some of the major economic events that occurred last month to give you some insight into what they mean for you as an investor. Please review at the end required disclosure statements. January was a very volatile month for stocks, largely because of events overseas. Markets grapple with the realization that though the United States economy is doing well, global growth is in trouble. Let's talk about what happened last month. Oil prices continue to dominate economic conversations. Oil continued to slide and by the end of the month had dropped 60% since last June. Though low oil and gasoline prices are a net positive for consumers who are paying less at the pump, analysts worry that oil prices are a symptom of weakening growth. And the global growth picture is weak. Both the International Monetary Fund and the World Bank cut their estimates for the global economic demand in 2015. Central banks around the world are also worried and responded with some major moves. While the United States Federal Reserve is thinking about raising interest rates, the European Central Bank announced its own bond buying program that it hopes will boost growth in Europe. The Bank of Canada voted to drop interest rates to help fight the effects of oil and its exports. What does this mean? Well, it means that the United States and the rest of the world are on diverging paths. We're moving towards a healthy economic growth while many economies overseas are struggling. Will a strong U.S. economy be enough to pull the world out of a slump? That's the big question. On the domestic side, the news is brighter. We got our first look at fourth quarter gross domestic product. The first estimate showed that GDP grew at 2.6%, lower than we had hoped. However, consumer spending was higher than expected, indicating that Americans are still buying. While 2.6% is a big drop after the 5% growth we saw in the third quarter, a lot of economic data has yet to be analyzed, and we can hope for upward revisions in the months to come. Fourth quarter earnings also started last month, and the news so far in this line is in line with previous quarters. Not great, but not bad. Looking at reports from 188 S&P 500 companies, earnings are up 6.6% over the fourth quarter 2013. However, total revenues are just 2.4%, indicating that many companies are still struggling with the low demand. But keep in mind that these numbers are in aggregate and there are a lot of individual success stories in each sector. Part of what we do for our clients is look for these opportunities for growth in every market environment. Looking ahead, we expect to see a lot of volatility as investors adapt to growing divergence between the U.S. and everyone else. While turbulent markets can be stressful, keep in mind that they often present opportunities. We are always monitoring markets and keeping our eyes open for those opportunities. That's it for January, the financial update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Howard Reitzel with Reitzel & Company, signing off for the month of January 2015. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal or financial situation, please give us a call at 812-500-0263. Thank you. We'd be happy to talk with you.